Mortgage Lending. We are here sitting with Tina Mulligan,
Hello.
our regional manager. Last week we had the amazing condo workshop, and it's all about condo and how to get a yes. So I decided to go and do a few questions with Tina, and because some of you requested to have like a little summary of what we discussed. So the first one, condo loans are going to be quite a bit in the next 10 years because community association will represent almost 50% of the housing market in the next 10 years. So definitely you want to know how to do them, how to get a yes. So Tina, what's the difference between the reviews, the limited and the full review on condos?
The limited review has very few questions. There's maybe 11 questions in total. It does not take in consideration the percentages. It does not care about whether the condo has a budget or not. And it's just a very easy way to get your condo financed. Under the full review, there is about 25 questions on the full questionnaire. You have to represent the budget. It has to have a certain percentage of the overall income of the association. 10% has to be set aside as a reserve for those condos. It also goes into the percentages of how much are primary investment or second homes. And it has more diligence on the actual questions when it comes to that. But the biggest issue on the full review is going to be the budget. For the reserves, it's going to be the percentage of ownership. And it also comes into play as far as the delinquencies and how much delinquencies are in that condo. However, by getting a full review approved, as you can see, there's a lot more financing opportunities at lower down payments than necessarily on the limited review condo. However, if you have a condo that does not have a budget, you can still get some really aggressive financing with those condos through the limited review channel.
That's great. So we can see the differences. It's just in the loan to value that this is where it makes the difference, and it helps people, especially the first time home buyers, get into condo home ownership. The next one we want to know is investor condos. This is a big bombshell that came a couple weeks ago, right?
This is a huge announcement that Fannie Mae has given an incredible opportunity now into the condo market that we really didn't have before. Before, just to let you know, the rule was if you had an investor that was purchasing a condo, the condo always had to go full review, meaning it had to pass all the sniff tests. Well, now Fannie Mae has come up and is allowing the investor condos to be done as a limited review. So again, it doesn't need to have the budget. The percentage of investment versus primary in those associations no longer matters. And it gives an incredible financing opportunity to those investors who want to purchase the condo market because it's a very easy rental kind of community. So this is a huge pickup for all realtors. When you have a listing that is a condo, you can even put in your NMLS, investors welcomed. That's huge. It opens up so many more buyers to your properties.
That is great. Detached condos. Before, I had a situation where I saw the community, it was single family home, but it was a condo and it had to go through all the scrutiny of a condo.
Yes.
And now, what's the news?
The news is it is actually waived. Now that they have let me just explain on the detached condos. Back when this entire area was being developed, they would zone them as a condo, but yet they put single family houses on them, they put some townhouses. It's not really a condo per se with a homeowners association, even though there might be a homeowner's insurance policy on them. It really was just handling the greenery of the land. So what Fannie Mae has now come up, they understand that it's old zoning. However, detached homes should not go through the same scrutiny of the limited review questions that are 11 or even the full review. So now they're doing those kind of condos as if it's just a single family, no matter how it's zoned. It opens up the avenue for those single family detached homes to go off the market a heck of a lot quicker without having to go through that monotony of a condo approval.
That's great. So we can do them at 5% down.
Absolutely.
That is amazing.
It is incredible.
That's great. Okay, Tina, the litigation on condos, what are those and how does it hold us from doing financing on condos?
Well, litigation, it used to be if there was any litigation in a condo, you could not do financing in that condo. Litigation is now a little bit more lenient. If the litigation has to do with a safety hazard area, then that particular condo will not be able to go through the normal channel of Fannie and Freddie. However, if it's just a normal, not any litigation is normal, but if it's a litigation like a slip and fall, or a homeowner is suing because maybe they had a leak in their kitchen or whatever that is, it is not a hazardous issue. Therefore, the litigation can still go through the normal channels of financing. Up to a 95%, you can still get outstanding litigation approved under the full review with 95% financing. So that gives you a little bit more leniency. When you hear litigation, just go that one step further. What's the litigation all about? And does the insurance policy of that condo cover whatever damage might come out of that litigation? And you are still clear to finance that condo. It opens up a good channel for you.
That is great. That's a lot more.
Mm-hmm.
The next one is ownership on condos. We used to have this one as like at the time when a lot of investors used to buy. In one condo they used to go 2, 3, 4, 10 units. And that hindered other people from getting mortgages. So now, what are the changes?
It is really exciting again. One of the old rules was you couldn't have one person owning more than 10% of the units in the condos. Now what Fannie Mae has done is they put a little bit of stipulation. If the condo is 21 units or more, they'll allow up to 20%. That is one entity owning at least up to 20%. They also made it more lenient for those smaller condos. When it comes to those that are 5 units or 10 units, they've allowed not necessarily the 20%, but out of the 5 units, you can have 2 units owned by one entity and still qualify for the max financing up to 5% or 5% down. And the same thing with the larger condos, because there are a lot of condos that have more than 21 units. You now can go up that 20%, and that is a huge increase. And again, just opens up a whole more or additional channels of financing for the borrowers that really truly want to live the condo life.
That is amazing. I love that new one. And now let's talk about those words that people are coming about. Land leases and rec leases. What do you do with those? Can we even finance those?
Non-warrantable condos, there's various reasons why a condo is not warrantable. Sometimes, obviously, if the budget doesn't adhere to that 10% rule, it makes it unwarrantable. Yes, you can go limited review. Also, rec leases, a huge issue, especially in South Florida. You have a lot of them that have the rec lease. A rec lease is really a lease on the land that the recreational community, like the clubhouse, the pool, etc. That's a rec lease. That's a little different than a land lease. But whether you have a rec lease or you have an entity that owns more than that 20%, or you have some litigation that might be a little bit more than a slip and fall, however, you still are looking for financing. The great news with the mortgage firm, if it doesn't come under the warrantable condo section of Fannie and Freddie, the mortgage firm still has portfolio financing available for those kind of condos. And that's not even just the conforming loan size limits. We can go up to a $25 million condo. So really it incorporates so much more lending availability to the borrowers that are out there searching for that kind of property. And we at the mortgage firm, when you come across something that then makes it non-warrantable, I encourage you, please call the professionals over here at the mortgage firm. We have great financing opportunities because in the portfolio arena, we deal with the borrower, not necessarily the project or what they're buying. So it just opens up a whole other channel of financing that makes that property move off that market for you.
That is great. Thank you so much, Tina. And guys, remember, we are here to help you sell more homes, sell more condos, and know what to do when the question comes, who to call. We're here to serve you. My name is Racheli. 954 loans for you, 954-562-6748. And remember, when it's time to run the numbers, we do pre-approvals in 24 hours. So reach out to us. Thank you very much. Bye-bye.
Thank you. Y'all have a great day.